The Bitcoin, Ethereum, and Blockchain Super Conference is coming to Dallas, Texas, February 16, 17, and 18 in 2018. If you know of a better way to get the latest insider knowledge about crypto, to hear directly from the top minds in this field, to interact personally with 800 fellow crypto lovers, hodlers, investors, miners, traders, developers, and founders, then I'd like to hear about it. If you don't, then you don't want to miss out. Register today for the Bitcoin, Ethereum, and Blockchain Super Conference. Go to bitcoinsuperconference.com and register today as a super early bird to get the lowest rates on tickets and hotel rooms. That's bitcoinsuperconference.com.
Welcome to Almost Here, Round the Corner Future Technology Podcasts with Richard Jacobs. Future technologies poised to transform our lives for better or worse are the focus of this podcast. Almost Here means these technologies are now here and starting to be used, or just around the corner, from Bitcoin to artificial intelligence, 3D printing, blockchain, virtual reality, and more.
Hi, this is Richard Jacobs with Future Tech Podcast. My guest today is Rob Palatnick, the Managing Director at DTCC. Rob, how are you doing?
I'm doing really good, Rich. Thank you very much for asking.
Yeah, thanks for coming. So, let's start off with the basics. Tell me about DTCC. What do you guys do?
So DTCC has been in existence for 40 years, and we serve the financial market infrastructure as the primary clearing and settlement organization for equities, fixed income, mutual funds. We do processing for the global swap derivative marketplace. We provide services to the insurance industry, a variety of services to the financial industry as an industry-owned utility.
Oh, okay. So for people that don't know, what's involved in settlement? What does that mean? Settlement of trades, or what? Let's go into depth into more into that.
Sure. If you're a buyer of, say, shares in a stock, and I'm a seller in shares of a stock, those trades go to DTCC from the exchanges or from whatever marketplace you do the trade on. DTCC actually guarantees the trade. So if you do the trade at a certain price, we guarantee that trade, that if you've bought shares of a stock at a certain price, we will make sure that you get those shares and that trade is consummated at that price. And then the settlement activity is we actually give you your shares and take the money and give it to the party that sold the shares of stock.
Yeah, nowadays, do shares actually change hands, or is it just kind of an electronic ledger that updates that says Party A no longer has it and Party B has it?
Excellent question. So 40 years ago, there were almost all physical pieces of paper, and there used to be bicycle delivery men with pouches running around or biking around Wall Street with those pouches in there containing shares, and they were bringing them from one firm to another. Those were all put into a vault around 1971, 72. That was the original Depository Trust Company. We've added a variety of services since then. It's all electronic now. So almost all movements today are electronic. And when I say almost, 99.9999%. We do 100 million trades a day that way. There's still the occasional person who wants to put a share of Disney over their child's crib. So there are certainly some pieces of paper still floating around, but not many.
100 million trades a day? That's the volume you guys handle?
And that includes our equities, fixed income. We do a lot of the majority of corporate and municipal bond processing. So if you have a school district that's issued a bond, it likely comes through DTCC, and the trading activity settles the same exact way.
So you guys keep a ledger, and that has to interact with the ledgers of many other institutions, I would guess, right?
Exactly. We are the master ledger for the industry. and we go through a process all day long of getting real-time messages from exchanges that have trade ledgers, from other trading firms and retirement accounts and pension funds that have their ledgers, and they send us what trades they have executed, and we do the processing of those trades. We do the risk guarantee, the risk management in case of counterparty risk, and then the ultimate settlement.
Yeah, I guess, the markets move so fast. That's why you have to guarantee a trade price, because there could be, slippage. If the market moves in between the time someone makes a purchase or a sale and the actual consummation of that.
Well, the markets up until literally a few weeks ago were on a 3-day settlement cycle, and it's important to know that settlement cycle, sometimes referred to as T plus 3, so trade date plus 3, and it's a trade date plus 2 just a couple weeks ago. That's a market convention that you can't settle any longer than 2 days, what used to be 3. If you want to settle today, if you want to sell me IBM shares and I have the money to pay for them, we can certainly do that. But many market participants buy what they can't pay for or sell what they don't own. It's similar to when you buy a house. You sign a contract, but you can't get financing for that house. You can't actually get the liquidity to pay for the house until you've done the engineer's report, until you've ironed out all the details of what the contract is about. So a lot of firms and a lot of trading accounts, a lot of pension funds and retirement accounts are engaged in lots of financial activity to try and maximize returns for the retail public, the investing public, and as part of managing their money and managing their assets, they all focus on when is the right time to do settlement and when do I need the liquidity to actually pay for shares that I'm acquiring. So the convention today is T plus 2. There's some discussion about continuing to look for opportunities to accelerate that. DTCC can handle same-day settlement, T plus 1 settlement, and every single day we get a certain number of trades that come into us for settlement on the day of execution or the day after. As long as the parties agree, our systems handle it fine.
Yeah, I spoke to Jonathan Johnson of Overstock.com, and I guess they have a T0 initiative. They want to use blockchain technology to have all trades settle within minutes, perhaps within seconds. Is DTCC involved in that? Are they looking at a system like that to help speed up trade settlement?
We can talk about distributed ledger technology in the broad sense because DTCC sees a lot of promise in the opportunities that the technology brings, from built-in integrity, built-in security, built-in privacy, immutability, audit perspective. The T0 and T1 and accelerated settlement as a problem doesn't exist. We can do T0 every day. We do T0, and every day we do T1. So that solution is looking for a different problem. I think the broader question that you were going at earlier, in terms of lots of different ledgers that then need to reconcile with each other, is a much more, I'll say, applicable and interesting challenge across the industry, that everybody has their own ledgers and everybody's got their own messages that are moving back and forth. So reconciliation, especially around exceptions, is something that is an industry challenge, and distributed ledger technology can provide opportunities for. But same-day settlement or real-time settlement is something that can be handled and is handled by existing technology.
Okay, I didn't know that. So what's going to be the killer app that allows your ledger to interact with other ledgers, instantly and without having to necessarily trust other ledgers that whether they're valid or not?
The killer app question is a really good one. DTCC is looking at the distributed ledger model and the capability across a number of our services. We're right now very focused on our credit default swap trade warehouse application. That's a mainframe application that was written over 10 years ago. And we had been already looking at an opportunity and a budget to replatform that application. Working with the industry, we did a proof of concept on distributed ledger technology and decided with the industry to proceed on replacing that application. That's a great example of a golden copy central ledger that we had for a particular asset, credit default swaps, that other firms have their ledgers. We have a whole bunch of messaging that goes between us and our member firms. There are a variety of different life cycle events. So if you do a credit default swap, every month there's a payment flow. Basically every day you have to determine if there is any credit events associated with that credit default swap. So there are all sorts of things that can happen during the life cycle. And if everyone was looking at a single ledger, a single trusted copy of that transaction, then nobody would have to go through extra reconciliations for payments and extra reconciliations every month and discussions about whether credit events have happened or not happened. There would be one model, one database, one set of data rules that everyone would be able to refer to. So that's the opportunity that we're pursuing, and we're working with the industry on that, and we're actually pretty deep into that project.
That's great. Where do you see electronic trading and settlement going? I guess this ties into everything we've talked about already, but what do you think is needed in the industry right now, and where is everything headed?
Another really good question. Evolution of any new technology takes some time, and the distributed ledger technology in particular, but even if you combine it with some of the other things that have really come out into the forefront of technology innovation and fintech in the last few years, like cloud computing, like robotics and cognitive and artificial intelligence, machine learning, crowdsourcing of funding and investment advice. There are so many different technology that are really just starting on that maturity curve that it's a little bit of, I'll say, speculative to predict how this all shakes out. One of the main things that DTCC sees, and we're owned by the industry. Every day we wake up and our entire goal is risk management and reducing costs and creating operational efficiencies, and that is our only motivation. We don't have an exit strategy. We're not trying to figure out how to monetize any of these opportunities. So not having a central ledger and implementing a distributed ledger is completely in our remit if it lowers risk and lowers cost for the industry. So our goal is very much to pursue that. The challenge right now is, like your previous example of one specific company and one specific vendor, there are literally hundreds that have come to us with opportunities. There are hundreds, if not thousands, of different opportunities being worked on across the industry. None of them are compatible. Every single one of them is a different model, a different stack of technology, and they're completely incompatible because they don't have any standards. So the vision of an individual investor, a retail investor like me, like I want to look at my bank accounts, my stock holdings, and being able to look at one ledger and having a simple view of everything I own on that one ledger doesn't exist today because every model and every vendor's offering is completely different. So until standards start to emerge and until interoperability starts to exist across the different ledgers, we're going to be in a world that's going to actually start looking more complicated because all these new ledgers, these thousands of ledger opportunities, have to still coexist with all the existing infrastructure that pension funds and retirement accounts and anything you have, in your personal investment accounts, they all have to coexist. So DTCC is very much driving open standards. We're on the Hyperledger Governing Board, and we were a founding member. We're on the Enterprise Ethereum Banking Working Group as a co-chair, and we're contributing code to the open source community. So we're really trying to drive the open source model and the interoperability and standards that are really needed to make this technology move into a more mature offering.
Okay.
I'll just say, as DTCC is owned by the entire industry, I don't think it's our place to really call anyone out. I will say that, any new technology is often absorbed by, at the beginning, by the more aggressive firms that are looking at opportunities with this technology. The interesting thing about distributed ledger, and to a degree, robotics and cloud, is it creates opportunity for the entire industry to lower costs. Distributed ledger is a network. It's a community technology. It only works if an entire network of consumers, of stakeholders, are sharing the same exact ledger. It doesn't work if you're doing a private experiment with or private proof of concept. It only works as a community. And DTCC, as an industry-owned utility focused on risk, sees a good opportunity to be able to create those models for the industry, to help create those networks, because everything we do, whether it's clearance or settlement or the insurance hub or our swap repositories, we are bringing an entire network with us. So every one of our solutions is a network offering. What we can provide is the governance model. We can provide, how do you know that this member of the community has met all the requirements of Know Your Customer? How do we know that they're going to be a good member of the community and not try and subvert the network or do some kind of denial of service or security attack? How do we make sure that all nodes are downloading code that has already been verified and doesn't contain any malware or any viruses? So there's a important function for a governing organization to be the adult in the room, and we're working with the industry, and our board is encouraging us to take that active role.
So what's your thought on other aspects of the industry, like Bitcoin? What do you think about Bitcoin and Monero and Dash and cryptocurrencies and things like that? Do you think they're going to survive? Are they going to have to go towards regulation and integrate with what you guys are doing, or what's your opinion?
So I'll start with the previous point that the things we're working on with the industry are right now private permissioned opportunities where we are the adult in the room and there is a governing body and an organization. I should point out that we're very heavy regulated. So everything we do is in concert with our supervisors, working closely with the regulators. We spend a lot of time in Washington educating our supervisors and lawmakers, but also working with them on where the right opportunities are. So right now, the way our work is proceeding, it's mostly on implementations. All of that, the work the ecosystem and the public work that's being done with Bitcoin and Ethereum, don't want to call all the activity a giant sandbox and a giant test case, but it is helping mature the technology. It is an opportunity to try out new models and new concepts at scale. We're not in the payment space, and nobody has asked us to accept a cryptocurrency, and none of our models and none of our regulators right now are aligned with a formal process and model for accepting a cryptocurrency in any aspect of our processing. But we're working with the open source community, which, the enterprise Ethereum is based on the public Ethereum, and that is open source. We're very active on understanding cryptography and encryption and what the current models are, not only that are going to secure today, but forward secrecy. So when quantum computing or some new development suddenly makes the existing security and encryption model that is securing things like Bitcoin obsolete and vulnerable to exploitation, we need to be able to make sure all of our models are able to advance and continue to provide security and privacy. So the fact that this ecosystem exists is allowing a lot of experimentation. I've got no opinion on the, I'll say, more speculative aspects of the value of the cryptocurrencies.
Okay. And any insights? You sit, well, I don't want to say you sit atop, but you're able to see, so much volume and activity and transactions going on, and you've been doing it for quite a while. Any surprising or interesting insights because of your position and, the trading that you see go on? Anything that, again, is unusual to you or surprises you, or just things that you delight in knowing that you want to share?
I don't know if there's anything surprising. I think, the way every technology evolves is there's this period of incubation, and in the pre-social media, pre-internet days, things like the database technology and even the early communication technology that underlie the internet, it kind of evolved in in academic institutions, in the military, in the geeks that were in the upper floors of different or lower floors of different technology organizations. And when it was ready for prime time, it started being reviewed and adopted by big enterprises. And then there was this sudden hockey stick of adoption where suddenly everybody was on it. It's a really different model today where, the open source and the internet and now fintech and the opportunity without, cloud is a real enabler. You don't need to invest in giant data centers anymore. You don't need to invest in huge infrastructure plants and huge capital outlays to buy equipment. You can just provision data centers literally on demand and have data centers in any region of the world to be able to, address whatever your application or service is. And there are so many people on the internet who are just looking for opportunities. You have, viable investors, you have viable workers, all online. So I'll say the fascinating thing is once a technology hits that inflection point where it's adopted, the adoption rate is astronomical. So data robotics is something that seems to have hit an inflection point, and almost every firm I've spoken with is involved in some kind of robotics or automation activity and some kind of early artificial intelligence, machine learning, cognitive evaluation. And that suddenly seems to be a lot of the talk. Cloud, I'll say, is starting to hit that same inflection point. More and more firms are getting comfortable with the idea of taking advantage of that and that they don't need their own infrastructure for all activities and that they could take advantage of those unlimited resources. So there's a number of different technologies that are all starting to hit that inflection point, and what that all is going to look like over the next 5 or 10 years, it'll be a fun journey.
All right, very good. Well, Rob, I appreciate you giving your insights. So I'm not sure if the listeners to this podcast will be of help to you or not, but how can they interact with DTCC? How can they get into contact with the company and perhaps explore working with you guys?
Certainly get in contact with me or our Office of FinTech Strategy.
The Bitcoin, Ethereum, and Blockchain Super Conference is coming to Dallas, Texas, February 16, 17, and 18 in 2018. If you know of a better way to get the latest insider knowledge about crypto, to hear directly from the top minds in this field, to interact personally with 800 fellow crypto lovers, hodlers, investors, miners, traders, developers, and founders, then I'd like to hear about it. If you don't, then you don't want to miss out. Register today for the Bitcoin, Ethereum, and Blockchain Super Conference. Go to bitcoinsuperconference.com and register today as a super early bird to get the lowest rates on tickets and hotel rooms. That's bitcoinsuperconference.com.
You have been listening to Almost Here, Around the Corner Future Technology podcast with Richard Jacobs. Subscribe to this podcast, post a review to discover more future technologies that are poised to transform our lives for better or worse, such as Bitcoin, artificial intelligence, 3D printing, blockchain, virtual reality, and more.